Well, good evening, friends. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening as we're sitting here now on Wednesday, the 12th of February, 2025, just about getting into mid-month. I'm wearing a sweater as I was outside shoveling. It's good exercise, so I like to do it. My wife's always going, why don't you get somebody to do that for you? I like to do it. It's exercise. You take it in steps and it's okay. And got to go out tonight after I do all these. One more, and then the storms are supposed to end. We did not get that I can see, we didn't get anywhere near the 6 inches that they were predicting for the city. The night's not over. All right, as you can see, up in the stock market, you wouldn't know that when you saw this morning's report come out of the CPI. Everything tanked. And that's because headline and core inflation were higher than the estimates. So the markets went down. It happened to be that today was the day that Fed Chair Powell was a second day of testimony, this time the House Financial Committee. And to make a long story short, he said, we got close last year to our target, didn't get there, getting closer, and you get bumps along the way. I don't know if it's anything more than noise in the data or not. They'll find out. But remember, you did have the fires in California. Car insurance soaring. Rent not breaking down. That's a big component of this, and it's not breaking down, contrary to what you might hear. Prescription medicine, up again. Services, not falling down. So you're seeing these areas where you get it, and January's notorious for things being a little bit of everywhere. February's not quite as bad. We'll find out where things actually are. All right, so I think you want to pay attention to that. We then got some more data. This afternoon, we saw the U.S. Treasury release the January budget deficit, and this is just a blowout number. No wonder there's Doge in America now where they're trying to take monies back. The January deficit was $129 billion. To give you an idea, a year ago, 1 year ago, it was negative $22 billion. They had estimated $95.5 billion. So this market is nearly, 5.5 times what it was a year ago? Something's very out of control. Budget spending, here's the numbers, pretty nutty. Tomorrow morning, we're going to get the PPI. Between CPI and PPI, the economists open their spreadsheets, they put the numbers in, and they're able to give you an idea of where PCE is going to come in. And as the Fed chair said today, that is the indicator they look at. So if you get another high number here and you had the CPI up, well, you can count on it. PCE is going to be going up too. Jobless claims are going to come out at 7:30. They're looking for about 214,000. And you're going to get the withdrawal of natural gas, and they're looking for 95 billion cubic feet. And that compares to a year ago of 58 and the average of about 145. But another cold weather spell, and I'm talking polar vortex, is coming through the Midwest. It'll go out east, and that's going to create problems and a lot of usage yet of these energies. All right. So where do you go with it all? Well, as I looked at it, and I'm just a simple analyst, all of this is inflationary. All right. You're spending more. You don't have it yet under control. You're trying to get it. There's 50 lawsuits against Trump again. If you're a Democrat, at what point do you say there's nothing wrong with trying to cut expenses? All right. But it's the way he's doing it that they're claiming. It is not. That's not it. I hope you're all smart enough to get this, all right? This is, again, the Democrats redoing what they did when he got his first term. How do we stop him on everything? And that's what they're trying to do in the courts. Tonight, the courts ruled in Trump's favor for a change, and they said the buyout program can proceed. That was in federal court. So if 80,000 people do accept it and take the early buyouts, that's another cut. We'll see what they actually get to. I've read reports that say Trump will never even hit $350 billion in cuts. He wanted to get up to $2 trillion. We're going to find out what he can and can't do. I never underestimate that man. He has a way of knocking it out of the park. When you look at the energies down, if there's peace, between Ukraine and Russia. Russian oil will come back to the market. It won't be sanctioned. The ships won't be sanctioned. That is what's bearish on that. As you know, you fell hard today and put interest rates, especially the 10-year. It went from just being at 4.42 to now 4.62, so it's added quite a bit back to it, and you're getting a little bit of a rally tonight. You were everywhere in the currency markets. There is no one place you were at. You were everywhere in the currency markets today, up, down, and sideways. I'll show you what I mean. So in the S&P, we are still staying over the 18-week average. The bias is bullish until that is broken. Number two, you haven't gone anywhere. All right. So as I said, you were everywhere today. Let's back this up and look at today's range. The high was 60.98 and a quarter. 78 points later, it fell. Then it came back. So the market went from opening, falling, coming up for other highs. It might have even gone to a new high on the day and then settled back a little. It was a wild trading day. If you're a volatility trader, this is a volatile market. The pattern on the chart is still bearish in the swing line. Lower highs, but the legacy is broken on that because you still have higher lows. So I call this as neutral as you can get. Notice where the market is stuck. The 18-day average of closes. We haven't gotten down to the 100-day. We did a week and a half ago, but we haven't recently. And the resistance is the upper Bollinger Band, which we haven't hit for 2 weeks. So you're sort of just drifting here. And remember yesterday when I said you're bringing in the black dashed lines, and that's a sign the market wants to spin its wheels for a bit. This is called spinning wheels. Remember that rock song many, many years ago? I'm trying to think of who did that. Then we have the lower highs, lower lows, and it got down to the Bollinger Band. So was I surprised today to see the support? Absolutely not. You got to 60.20.75, 16.75 was the Bollinger Band. So you made a run for it, and then you came back, didn't quite hit it, stuck at the 18-day average. In the NASDAQ, stuck at the 18-day average, trying tonight to climb back up. It's overbought. I don't see a pattern here yet that makes sense. Now, the highs, let's go to this. The highs of 2 days ago were 21,871 and a quarter. You then broke down, and tonight you're at 21,898. You've just made a higher high. So you're going to have a new pattern. And this is literally since I've been doing this with you tonight. Higher highs, higher lows, both of them together, higher lows, higher high. That'll get rid of these arrows. They'll be pointing up. You are overbought, but you're back in an uptrend until you take out the lows of today. When we come over to the micro Dow, again, you didn't make it to the lower Bollinger Band. The trend is down. The resistance is 44,686.40. I don't see anything to do there. Momentum still says this market can ease its way down to the Bollinger Band. And in the Russell, it was a day to come out of all shorts. The market got down to first the Bollinger Band, then it went to the 200-day average, held it, and away you go. My clients that were with me in the trade on this, they know that that is where I was telling them to come out of the trade, and I was a happy camper. This was the only market I was trying on the short side. Why? Because you had a true downtrend in it. Doesn't mean I was right. I could have been so wrong. They happened to go into the market. Not all of them. I don't know who takes the trade Rex in that, but they came out there, and if they held on to it, I said by the end of the day, if you're holding on, you can't stay with it if it comes back to break even from your sell point, and that's what happened if they didn't come out of everything. When you come over to the 10-year notes, you went up to the upper Bollinger Band, now to the lower band. I know somebody's going to say they're good enough to have caught that whole thing, and I congratulate you, but it's all the wrong thing to have done. When you're selling into a Bollinger Band, who's to say it can't keep going higher on you? At what point do you scream uncle? Or if you're buying it, the same thing. It's not how you use Bollinger Bands, not in my opinion at least. And I think today was a short covering day. I think the bears came out, oversold down to the Bollinger Band. And I think the same thing in the 2-year. That doesn't mean you can't add more yield. it means this was the high probability area that I think to come out. In the dollar index, you're nowhere. Just look, you're stuck at that 18-day average. You have an outside day down, as it turns out. You can see in the euro, you went back up, hit the upper Bollinger Band, can't seem to get out of harm's way from that. The British pound cannot seem to mount a move to stay under the 18-day average, which is what it needs to be bearish again. I don't see a play there at all. In Bitcoin, you made your one thrust at the lower Bollinger Band, and the market's sort of just sitting right here. I think the bears are saying to themselves, okay, we've seen a lot. What's the next step? I certainly won't want to see the market get over right here, the 99,775. That could be a real problem if you're bearish. In the energies, you've decided, or not me, the marketplace has decided to make a home temporarily of the 200-day average as a support zone. It is oversold. Market could drop further. We'll see what it does. WTI got up, as you know, the day before, not today, but yesterday, to the 18-day average, ran right out of its momentum and right down today, got to the 200-day average, and by the end of the day closed under it, but you're oversold, not trending. That's a difficult play. You have no trend as I see it in the heating oil. A lower and low, higher high, and suddenly the Bollinger Bands are wrapping their arms around the market. They're trying to pull volatility out of it. And in that gas, you're just within a hair's breadth of hitting the upper band. If it should hit it, I think the pros will take their money off the table. Not go bearish, just take money off the table on the long side. It's a vertical price rise. I certainly wouldn't want to see, if I were watching it, new lows from where you're at right now starting to be made. Could be time to just say, okay, it's gone far enough. Doesn't mean it has to stop, but high probability that you're into that zone. So the way you hear me talk here is the way I talk in my twice daily research. Now, my research includes, first, at 6 in the morning, a recording where I tell you buy here, sell there. This is what I see in the market. And we track it on a spreadsheet until it's off, and I track it in my written updates. Two different ways that you get to see it. It's not a track record that I keep records of at all. I don't sell that way. I don't try to do it, and I don't publish those records. Each trade stands on its own until you're out of the trade. Not interested in managing money. I'm not interested in the cumulative effect. I hope I can do well, and that's where it ends, because nobody knows if they're going to do well. I think after these many years of doing it, I'm better than most, but that's all I can say. So as I look at the marketplace and try to figure out where to go with it all, you get written updates from me. You're going to get special reports. And I'm trying to do one right now. I tried today and I said maybe I should wait for PCE. The reports typically include graphics, commentary, a lot of bullet points. I do them at 11:30 in the morning Central Time and then before 8 p.m. at night. And I'm very specific with how to get in, how to get out of a market. Momentum trades have their own rules. I give those to you. And I cover this whole array of markets for you. So I'm looking at everything. To me, a chart's a chart. Often I'm going to show you daily and weekly charts lined up together. And the reason is I really am not interested in markets that have the daily chart bearish and the weekly chart bullish. I want them to both be going at least similar. If not, one can be neutral, the other can have a trend. But if they're fighting each other, I've learned to walk away from that. You'll see how I do it. You'll see the indicators. I teach as I go. I answer questions. I get people that will write me, Ira, I saw you did this, explain this to me or that. I do my very best to answer your questions. Oftentimes, paid subscribers, they'll ask and I create a fast video for them and I give them the answer to what I'm saying. I can't see a better way because it's all based on the chart action I'm doing anyways. And away you go with it. So, two things you can do. You can go to iraepstein.com, free offers to get a 2-week free trial. If you've already had free trials and you're ready to join us, go to iraepstein.com research. You'll see in there the research products and away you go with it. I'm Ira. Have a great evening and I'll catch up with you all in the morning.